From the trading desk of dailyforex.com, this is Christopher Lewis looking at the upcoming July 16th Forex session in the Euro. As you can see, the Euro-dollar pair did have a rather interesting session on Friday as we did recoup all losses from Thursday. The rundown was a shooting star that got broken to the downside, and it looked like we were going to continue much lower, but the 122 level has come in as support. Having said all of this, as we look at the pair from a longer term perspective, we did have a bearish flag that broke down, and this handle, or this pole rather, did suggest a 1,000 pip drop. Now, while that sounds extreme, you have to keep in mind that there's no time limit on that. We broke down just above the 125 level or so, so that does suggest that we're going to head close to 115. Whether or not we make it is irrelevant, but what it does show is that there's extreme bearishness in this pair, and why wouldn't there be with all of the problems in Europe? Looking at this candle, I'm going to keep this strategy of mine fairly simple. I see that perhaps we see a bounce coming, but it has to be said that we did fail right at the first signs of resistance. So that is interesting in and of itself. The 122.50 level is what I'm calling, for lack of a better term. 123, I believe, could offer resistance, as could 124. So I'm simply going to look for some type of resistive weak candle at one of these handles, 123, 124, and most certainly 125. Perhaps a shooting star or something like that from which to sell. I won't necessarily limit it to a daily candle either. A 4-hour candle would do just as fine. I do believe that there is a lot of noise between here and 123.50 or so, so we may not even get much of a pop. It is worth noting that even in a highly volatile session on Friday that saw most risk assets climb drastically, even though the euro did climb, it really, at the end of the day, was only up about 45, 50 pips or so. Not that impressive.